You know what's absolutely insane right now? While you're scrolling through your phone, checking social media, maybe thinking about what's for dinner. There's a full-blown economic war happening that could literally wipe out your savings, crash the housing market, and trigger a financial crisis that'll make 2008 look like a minor speed bump. I'm not being dramatic here. I'm not trying to scare you for clicks. This is real. It's happening right now in the White House, and somehow, most people have absolutely no idea it's even going down. Here's the deal. Donald Trump just declared war on the Federal Reserve. Yeah, you heard that right. The President of the United States is going head-to-head with Jerome Powell, the guy who basically controls the money printer for the entire global economy. And we're not talking about some Twitter beef or a heated press conference. We're talking about a full criminal investigation, grand jury subpoenas, threats of indictment, the whole 9 yards. This is political revenge at a level we've never seen before in US politics, and the stakes: only the stability of the dollar, America's economic dominance, and pretty much every dollar in your bank account. Let me paint you a picture of what's actually at stake here. Because the financial news isn't giving you the full story, the Federal Reserve isn't just some boring government agency that economists talk about in stuffy conferences. It's the central nervous system of the entire global economy. Every interest rate on every loan, every mortgage, every credit card, every business expansion, it all flows from the decisions made by the Fed. And the one rule, the one sacred principle that's kept this whole system from collapsing for nearly a century, is that the Fed operates independently. Politicians don't get to bully them, threaten them, or force them to make decisions based on what'll win the next election. But Trump just took a sledgehammer to that firewall. The investigation he launched through the Justice Department is really about the official story: some building renovation cost overruns at Fed facilities. That's just the excuse, the cover story they're selling to the public. What this is really about is forcing Jerome Powell to bend the knee, to slash interest rates regardless of what the economic data says, to put short-term political gains ahead of long-term stability. It's about turning the Federal Reserve into a political tool. And when that happens, when central banks start dancing to politicians' tunes instead of following sound economic policy, that's when economies don't just stumble, they absolutely crash and burn. Here's what makes this even more terrifying. We've seen this movie before, and we know exactly how it ends. Back in the 1970s, President Nixon pressured Fed Chair Arthur Burns to keep interest rates artificially low because he wanted a booming economy for his re-election campaign. Burns caved. Nixon got his landslide victory in '72, but you know what the American people got? A decade of economic turmoil that destroyed the middle class. Stagflation, a toxic combo of skyrocketing prices and a dead economy, became the new normal. People's savings got wiped out by inflation. Jobs disappeared. The dollar weakened. It took a new Fed chair, Paul Volcker, to finally break inflation's back in the early '80s, but he had to jack up interest rates so high that it triggered a brutal recession. Except this time he's got tools Nixon could only dream of: a Justice Department willing to launch criminal probes, a Supreme Court case aimed at removing Fed governors who won't fall in line. And the target isn't just some policy disagreement, it's the complete destruction of Federal Reserve independence. The economic impact of what Trump is doing right now could dwarf anything we saw in the 2008 financial crisis, because back then, the Fed still had credibility. But once that trust is gone, once the world sees the Fed as just another political puppet, that's when the real nightmare begins. Think about what happens when global investors lose faith in American institutions. The US dollar has been the world's reserve currency for over 80 years. It means every barrel of oil, every international trade deal, every government's savings account is denominated in dollars. It's what lets America borrow money cheaper than anyone else on the planet. But that privilege rests entirely on one fragile thing: trust. Trust that America is stable. Trust in the rule of law. Trust that the Federal Reserve will protect the value of the dollar regardless of political pressure. The moment that trust breaks, the privilege evaporates. Foreign governments start selling their treasury bonds. International investors pull their money out of American stocks. And when trillions of dollars start fleeing the country, interest rates explode. Not because the Fed raises them, but because the market forces them up. Mortgage rates shoot into double digits. Car loans become impossible. Businesses can't borrow to expand or even make payroll. The stock market reprices for a future with no earnings. You're 401k, decimated. And here's the real kicker, this isn't some distant threat. The crisis is already beginning. Gold prices just hit record highs because smart money is running for the exits. 3 former Fed chairs, Janet Yellen, Ben Bernanke, and Alan Greenspan, broke their silence to issue a joint warning, calling this investigation an unprecedented attempt to use prosecutorial attacks to undermine Fed independence. Market instability is showing up everywhere. Treasury yields are volatile. Currency markets are jittery. The political headlines keep getting crazier. This is a showdown between the White House and the Federal Reserve. Political conflict threatening the entire global economy. And most people are scrolling past it like it doesn't matter. But it does matter. It matters more than almost anything else happening right now. Alright, let's back up for a second and make sure we're all on the same page here. Because if you don't understand how the Federal Reserve actually works, the rest of this story won't make sense. And trust me, the financial news doesn't explain this stuff in a way that normal people can actually understand. They throw around terms like monetary policy and quantitative easing like everyone has got an economics degree. But I'm gonna break it down so clearly that even your teenager could follow along. The Federal Reserve is basically the bank for banks. It's the institution that controls how much money flows through the entire US economy. And it has got 2 main jobs that Congress gave it decades ago. Keep prices stable, which means fight inflation and keep as many people employed as possible. Those 2 goals often conflict with each other, which is why the job's so tricky. The Fed's main weapon for hitting these targets is the interest rate. When the economy's running too hot and prices are jumping, the Fed raises rates to cool things down, make borrowing more expensive, slow down spending. When the economy's in the dumps and jobs are disappearing, it cuts rates to make borrowing cheaper, encourage spending, get things moving again. Now here's the critical part that most people miss. For any of this to work properly, the Fed has to be independent from political pressure. And I mean truly independent, not just independent on paper. Politicians, regardless of whether they've got a D or an R next to their name, almost always want the same thing: low interest rates, especially right before an election. Why? Because low rates juice the economy, make the stock market go up, make people feel wealthier, make it easier to buy houses and cars. Voters see their 401ks growing and think, hey, things are pretty good, and they vote to keep the current leadership in power. It's basic political strategy that's been around since democracy was invented. But here's the problem with that approach. What's good for winning elections isn't always what's good for the long-term health of the economy. Sometimes you need to raise rates even when it's unpopular, even when it might trigger a recession. Because the alternative, letting inflation run wild or letting massive bubbles form in the market, is a worse down the road. That's where Fed independence comes in. The idea is that you put smart economists in charge of monetary policy. Give them long terms so they're not worried about getting fired every time they make an unpopular decision, and let them make the tough calls based on data rather than political considerations. The whole setup goes back to the disasters of the early 1900s, when we had periodic banking panics that would wipe out people's savings and crash the economy every few years. The Federal Reserve was created in 1913 specifically to stop that chaos, to provide stability to the financial system. And over time, especially after the disasters of the Great Depression and World War II, the Fed's independence became sacred. Democrats and Republicans might disagree on literally everything else, but they agreed on this. You don't mess with the Fed's ability to make independent decisions about economic policy. That consensus held through crisis after crisis: the inflation of the 70s, the stock market crash of '87, the dot-com bubble, the 2008 financial crisis, until now. Trump's approach to the Federal Reserve represents a complete break from decades of precedent in U.S. politics. He's not just complaining on Twitter or giving speeches about how rates should be lower. He is using the full power of the executive branch, specifically the Justice Department, to launch a criminal investigation into Jerome Powell, the Fed chair he personally appointed back in 2018. Think about how wild that is for a second. Trump picked Powell for the job, thinking he'd be a reliable ally. But when Powell started making decisions based on economic data rather than political preferences, When he refused to slash rates as aggressively as Trump wanted, suddenly he became the enemy. The official story behind this government investigation is almost laughably thin. They're supposedly looking into a $2.5 billion renovation project on Federal Reserve buildings, claiming there might have been cost overruns and that Powell potentially misled Congress about the details. Now, even if that were true and Powell denies it completely, does that really warrant a criminal investigation with grand jury subpoenas and threats of indictment? We're talking about building renovations here, not some massive fraud scheme. It's the kind of thing that normally gets handled through congressional oversight, maybe an internal audit, some strongly worded letters. You don't bring out the nuclear option of criminal prosecution unless you're trying to send a very different message. And that message is crystal clear to anyone paying attention. Fall in line, or we'll destroy you. This is political revenge dressed up in legal language. It's economic policy, being held hostage to political conflict. The whole point of the investigation is to actually prosecute Powell for construction cost overruns. It is to create enough pressure, enough fear, enough uncertainty that he either caves and starts cutting rates the way Trump wants, or he resigns completely and gets replaced by someone more compliant. Either outcome gives Trump what he wants: control over the institution that controls the money supply. Jerome Powell, to his credit, isn't playing along. Instead of quietly loitering up and hoping this blows over, he came out swinging with a video statement that was absolutely unprecedented. He called out the investigation for what it really is, saying the threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. That is the Fed chair publicly accusing the president of using prosecutorial power as a weapon of political revenge. That doesn't happen in stable democracies, and Powell's not alone in sounding the alarm. The fact that three former Fed chairs, Yellen, Bernanke, and Greenspan, came together to issue a joint condemnation tells you everything about how serious this crisis really is. These are people who've dealt with political pressure from multiple presidents, who understand exactly what's at stake, and they were scared enough to break their usual silence and warn the public that we were heading into dangerous territory. Now let's talk about the chess match happening right now between Trump and Jerome Powell, because this is where things get really fascinating and really dangerous at the same time. Powell's in what you might call an impossible position, stuck between a rock and a hard place. Except in this case, the rock is the President of the United States and the hard place is the potential collapse of the global economy. Every move he makes from here on out could either save the Federal Reserve's independence or destroy it completely, and there's no instruction manual for navigating a crisis like this in US politics. Here's the situation. Powell's term as chair of the Federal Reserve ends in May 2026. That is just a few months away. Normally, when a Fed chair's term expires, they resign from the Board of Governors completely and ride off into the sunset, maybe write a book, give some speeches, enjoy retirement. But Powell has got a wild card up his sleeve that Trump and his allies probably didn't count on. See, being chair and being a governor are actually two separate appointments with two different timelines. Powell's term as a governor doesn't expire until January 2028, almost 2 full years after his term as chair ends. This creates what political analysts are calling the Powell dilemma. And it's basically a high-stakes game of chicken with the entire economy as collateral. If Powell resigns completely in May, steps down as chair, and also gives up his governor seat, Trump gets exactly what he wants. He can appoint a new, compliant chair who'll slash interest rates regardless of what the economic data says, and he can fill the governor vacancy with another loyalist. Game over. Fed independence dies, and economic policy becomes just another tool of political revenge. But what if Powell doesn't play along? What if he steps down as chair but refuses to leave the Board of Governors? That move would be absolutely unprecedented, and it would drive Trump and his administration absolutely nuts. By staying on as a governor until 2028, Powell becomes this thorn in their side, a constant reminder that not everyone's willing to bow to political pressure. More importantly, he'd be a crucial swing vote on the 7-member Board of Governors. Even with Trump appointing a new chair, even with filling other vacancies with loyalists, Powell could potentially block the worst decisions could be the voice of reason pushing back against economic policies designed for political gain rather than long-term stability. The White House knows this, which is why the criminal investigation is so perfectly timed and so perfectly vicious. It's not really about prosecuting Powell for construction cost overruns on some Fed building renovation. That's laughable on its face. What it's really about is creating a legal mechanism to force Powell out for cause before his governor term expires in 2028. If they can get an indictment, if they can paint him as corrupt or dishonest, suddenly they've got grounds to remove him from the board completely, regardless of when his term technically ends. It's an end run around the whole system of Fed independence, using the Justice Department as a weapon in what's essentially a political conflict over economic policy. Powell, to his absolute credit, isn't backing down even an inch. When those grand jury subpoenas got served on January 9th, when the threat of criminal charges became real and not just speculation, he could have quietly resigned. Could have said this isn't worth the fight, let someone else deal with this mess. Instead, he came out swinging with that video statement that basically declared war right back at the White House. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates, based on our best assessment of what will serve the public. Rather than following the preferences of the president, he said, looking straight into the camera. That's not the language of someone who's about to fold. That's someone drawing a line in the sand. And then he went even further, saying public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do. Think about the implications of that statement for a second. He's not just defending himself, he's defending the entire institution of Federal Reserve independence. He is saying that some principles are worth fighting for even when the most powerful person in the world is threatening to destroy you. That kind of courage is rare in modern US politics, where most people fold the moment things get uncomfortable, where careerism and self-preservation usually win out over principle, but courage alone might not be enough to save the Fed's independence. Because Trump is not just using one weapon, he is using every tool at his disposal to break the institution. The criminal investigation is just the most visible part of a broader assault. There's also a Supreme Court case scheduled for arguments on January 21, 2026, aimed at removing Lisa Cook, another Fed governor, over what the administration claims are issues with mortgage fraud from years ago. The details are murky and disputed, but the intent is crystal clear. Remove anyone who won't fall in line, replace them with loyalists, and turn the Federal Reserve into an extension of the White House. This multi-pronged attack is what makes the current situation so much more dangerous than previous conflicts between presidents and the Fed. We've had presidents complain about Fed policy before. We've had public disagreements, angry phone calls, strongly worded statements. But we've never had a president willing to weaponize the entire executive branch, the Justice Department, the courts, the regulatory apparatus to destroy Fed independence. This is scorched earth political warfare. And the economic impact could be absolutely catastrophic if it succeeds. What's happening right now isn't just about Trump versus Powell, isn't just about interest rates or inflation targets or any specific economic policy. It is about whether the institutions that we kept America stable and prosperous for generations can survive a dire court assault from political power. It is about whether the rule of law means anything when the president decides an independent agency is inconvenient for his agenda. And it is about whether the global economy can function when the foundation is built on trust in American institutions, trust in the dollar. Trust in the Federal Reserve's independence gets ripped apart by political revenge and short-term thinking. Alright, so we've talked about what's happening in Washington, the power struggle between Trump and Powell. The criminal investigation, that's really just political revenge dressed up in legal language. But here's what most of the financial news coverage is missing. This isn't just an American problem anymore. What started as a domestic political conflict has now become a global crisis that is threatening to reshape the entire world economy. And the scary part, most people outside of financial circles have no clue how bad this could get. Let us talk about why the rest of the world cares so much about Fed independence and why foreign governments are watching this situation with absolute terror. The US dollar isn't just America's currency, it's the global economy's lifeblood. When you buy oil from Saudi Arabia, you pay in dollars. When China trades with Brazil, they settle in dollars. When the European Central Bank needs to hold reserves, they hold dollars. This isn't an accident or some temporary arrangement. It's been the foundation of international commerce for over 80 years, ever since the Bretton Woods Agreement near the end of World War II established the dollar as the world's reserve currency. This system gives America what economists call exorbitant privilege, and it's worth trillions of dollars to the US economy. Because everyone needs dollars for international trade, there's constant demand for the currency, which keeps its value high. Because foreign governments hold treasury bonds as their savings, the US government can borrow money at incredibly low interest rates that no other country could dream of. It's like having the world's credit card with no limit and barely any interest charges. America can run massive deficits, fund enormous government programs, and maintain a military presence across the globe, all because the dollar's special status makes it cheap and easy to borrow. But here's the catch that Trump and his allies either don't understand or don't care about. That exorbitant privilege isn't guaranteed. It's not written into the laws of physics. It exists purely because of trust that America is a stable country with strong institutions. Trust that the Federal Reserve will protect the dollar's value regardless of political pressure. Trust that investing in US Treasury bonds is the safest bet on the planet. The moment that trust evaporates, the whole system collapses like a house of cards. And what we're watching right now, with this government investigation into Powell, is trust evaporating in real time. Think about it from the perspective of a finance minister in Japan, or Germany, or Singapore. You've got billions of dollars in US Treasury bonds sitting in your country's reserves. You've been told your whole career that these are the safest assets in the world, that no matter what happens, the US government will honor its debts and the Fed will maintain the dollar's stability. But now you're watching the President of the United States weaponize criminal prosecution against the Fed chair for refusing to follow political orders. You're seeing the independence of the central bank, the one thing that made you trust the dollar in the first place, being systematically destroyed. What do? The rational response is to start diversifying away from dollars, to reduce your exposure to US assets, to look for alternatives that seem more stable. Maybe you start buying more euros, more yen, more gold. Maybe you reduce your holdings of treasury bonds and look for other safe havens. And when you start doing that, when finance ministers across dozens of countries all start making the same calculation, that's when market instability turns into a full-blown crisis. The selling pressure on treasury bonds increases, which drives up interest rates, which makes it more expensive for the US government to borrow money, which creates a vicious cycle that feeds on itself. We're already seeing the early warning signs of this process beginning. Gold prices hit record highs the moment news of the criminal investigation broke, because gold is the classic safe haven asset that people flee to when they lose faith in currencies and governments. Currency markets have gotten weirdly volatile, with the dollar weakening against other major currencies despite the Fed maintaining relatively high interest rates. Treasury yields have been jumping around more than normal, which suggests investors are getting nervous about holding long-term US debt. These might seem like small technical details, but to people who understand financial markets, they're like smoke detectors going off before you can see the flames. The political headlines coming out of other countries tell the same story. Usually, foreign leaders are extremely careful about commenting on internal US politics. They'll make bland diplomatic statements, express confidence in American institutions, avoid anything that might seem like interference. But over the past few weeks, you've seen unusually blunt warnings from allies. European finance ministers talking about the need for central bank independence. Asian economic officials expressing concern about dollar stability. Even the typically cautious IMF issued a statement emphasizing the importance of Fed independence for global financial stability, when the whole world is essentially saying don't do this. You're going to hurt everyone. That should be a massive red flag, but the most telling reaction has been from Republican Senator Thom Tillis, a key member of the Senate Banking Committee. In US politics, you almost never see members of a president's own party publicly breaking ranks on major issues, especially not on something as important as Fed policy. But Tillis came out swinging, calling the investigation inappropriate and vowing to block all of Trump as Federal Reserve nominees until the probe is resolved. He even questioned the DOJ's credibility in pursuing this case. When you've got that level of bipartisan condemnation, when even political allies are saying this has gone too far, you know the situation is genuinely dangerous. The economic turmoil we're facing isn't hypothetical or speculative, it's basic cause and effect. Political interference destroys Fed credibility. Lost credibility triggers capital flight. Capital flight drives up interest rates and crashes asset prices. Higher rates and lower asset prices freeze the real economy. A frozen economy means job losses, business failures, and economic collapse. We've seen this pattern play out in country after country throughout history. Turkey under Erdogan, Argentina under multiple governments, Venezuela under Chavez and Maduro. Every single time a leader decides to politicize the central bank, to turn monetary policy into a tool of political revenge or short-term popularity, the result is economic disaster. The only question is how bad the disaster gets and how long it takes to recover. So let's get real practical here and talk about what this actually means for you, for your money, for your job, for your family's future. Because all this talk about Fed independence and political conflict and global markets can seem pretty abstract until you understand how the dominoes fall from Washington, D.C. straight into your bank account. And trust me, once you see the chain reaction that's already starting, you're gonna understand why this is the most important economic story happening right now. Even if the financial news isn't covering it that way, here's how the economy crash unfolds, step by step. First domino, Fed credibility gets destroyed. That's already happening. The moment Trump launched this criminal investigation, the moment those grand jury subpoenas got served, global investors started questioning whether the Federal Reserve can actually operate independently anymore. And once that question gets asked, once people start doubting, the credibility is gone. You can't unring that bell, even if the investigation gets dropped tomorrow. Even if Powell stays in his position, the damage is done. The world has seen that the White House is willing to weaponize criminal prosecution to influence economic policy, and that changes everything. Second domino, capital flight begins in earnest. This is where things start getting really dangerous really fast. International investors who've been holding trillions of dollars in US stocks and treasury bonds suddenly start rethinking their positions. Why keep your life savings in a country where the government seems willing to destroy its own central bank for political revenge? It's not a slow, gradual process either, it's more like a stampede. One major investor pulls out, which spooks others, which creates selling pressure, which makes more people panic and pull out. We're already seeing the early signs with gold hitting record highs and treasury yields getting volatile. But that's nothing compared to what happens when the floodgates really open. Third domino, interest rates explode, but not the way you'd expect. Here's the counterintuitive part that confuses people. The new, politically controlled Fed might actually be trying to cut rates, doing exactly what Trump wants, but it won't matter because the market will force rates up anyway. See, when foreign investors dump US Treasury bonds, the price of those bonds plummets. And in the bond market, there's an inverse relationship between price and yield. When prices go down, yields go up. Investors will demand much higher interest rates to compensate them for the massive new risk of holding US debt. So even if the Fed is screaming we're cutting rates, the actual borrowing costs and the real economy could be skyrocketing. Fourth domino, the real economy freezes solid. This is where it hits Main Street, where it hits your daily life. When treasury rates explode, that ripples through every single borrowing cost in the entire economy. The 30-year mortgage rate, which is basically treasury rates plus a spread, shoots into double digits like we saw in the 1980s. Suddenly nobody can afford to buy a house, which means the housing market doesn't just slow down, it stops dead. Car loans become impossibly expensive, so auto sales collapse. Credit card rates go astronomical, crushing consumer spending. Small businesses can't get loans to expand or even to cover their operating expenses. Big corporations can't borrow to invest in new projects or equipment. But the real killer is what happens to corporate America. Most big companies run on debt. They borrow money to invest, to expand, to make payroll, to buy inventory. when those borrowing costs suddenly triple or quadruple. Their entire business model breaks. Profitable companies become unprofitable overnight. Projects that made sense at 5% interest rates become disasters at 15% interest rates. And what do companies do when they're losing money? They lay people off. Thousands of layoffs become tens of thousands, become hundreds of thousands. The unemployment rate, which has been pretty stable, starts climbing fast. Fifth domino, the stock market collapses. And we're not talking about a 10% correction or a 20% bear market. We're talking about a fundamental repricing of corporate America based on a future with no earnings growth, with companies struggling to survive, with consumer spending in free fall. Your 401k, your IRA, your kid's college fund, all of it gets decimated. The wealth effect that made people feel confident about spending money, gone. People see their retirement savings cut in half and they panic, which makes them stop spending, which makes the recession even worse. It's a vicious cycle that feeds on itself. Sixth domino, the dollar collapses and inflation goes haywire. This is the endgame, the nightmare scenario that keeps economists up at night. As the world dumps dollars, as confidence in U.S. institutions evaporates, the value of the currency itself plummets. And here's what people don't realize. America imports a massive amount of stuff. Electronics from Asia, clothes from Bangladesh, food from all over the world. When the dollar loses half its value, suddenly everything we import costs twice as much. This isn't the 3 or 4% inflation we've been dealing with, this is double-digit inflation. Maybe even hyperinflation depending on how bad it gets. Now you're living through the absolute worst-case scenario, stagflation on steroids. High unemployment because the economy's frozen. High inflation because the dollar's collapsing. Your money becoming worth less every single day. Jobs disappearing left and right. This is the economic turmoil that destroyed countries, that created lost decades, that turned middle-class families into desperate people struggling to survive. And it's not some distant possibility or fear-mongering hypothetical, it's the logical, inevitable result of destroying Fed independence and turning monetary policy into a tool of political conflict. The 2008 financial crisis. That was a banking crisis that spread to the real economy. This would be different. This would be a trust crisis, a credibility crisis, an institutional crisis, and those are way harder to fix because you can't just inject liquidity or bail out some banks. You've got to rebuild trust, and that takes years. Maybe decades. The political revenge that Trump's pursuing right now. The government investigation he's using to bully Jerome Powell could trigger economic impact that makes the Great Recession look mild by comparison. You know what's wild? We've actually been here before. Not exactly like this, but close enough that anyone who knows their history should be absolutely terrified right now. Because every single time a political leader has tried to bend a central bank to their will. Every single time political revenge has trumped sound economic policy. The results have been catastrophic. And I am not talking about ancient history or obscure examples from tiny countries. I am talking about major economies, powerful nations, situations that looked stable right up until they weren't. Let us start with the big one that everyone should remember but somehow doesn't. Nixon and Arthur Burns in the early 1970s. Richard Nixon was facing re-election in 1972, and like any politician, he wanted the economy humming along nicely when voters went to the polls. So he started pressuring Arthur Burns, the Fed chair at the time, to keep interest rates low and pump money into the system. Burns, who should have known better, who understood the risks, ended up caving to that political pressure. He kept rates too low for too long, prioritizing Nixon's re-election over long-term economic stability. And sure enough, Nixon won his re-election in a landslide. The economy looked great in the short term. Mission accomplished, right? Except here's what happened next. The bill came due, and it came due with a vengeance. Combined with oil shocks from OPEC and other factors, that easy money policy unleashed a tidal wave of inflation that devastated the American middle class for an entire decade. We got stagflation, an economic nightmare where prices skyrocket while the economy stagnates and jobs disappear. Inflation hit double digits. Unemployment hit double digits. People's savings got destroyed. The American dream seemed to be dying in real time. It took Paul Volcker, a new Fed chair who was fiercely independent and willing to make brutally unpopular decisions to finally break inflation's back in the early 1980s. But the medicine was almost as painful as the disease. Volcker jacked interest rates up to nearly 20%. Can you even imagine that today? Which triggered a severe recession. Unemployment went above 10%. Businesses failed by the thousands. But it was necessary, because Nixon's political interference with the Fed had poisoned the entire economic system, and the only way to fix it was through that painful reset. The lesson from that era should be crystal clear. When presidents bully the Federal Reserve into serving short-term political goals, everyone pays the price later. The economic impact doesn't show up immediately, which is why politicians keep trying it, but it always shows up eventually. And what Trump's doing right now makes Nixon look restrained by comparison. Nixon pressured Burns behind closed doors, through phone calls and private meetings. Trump's launching criminal investigations, serving grand jury subpoenas, using the full power of the Justice Department as a weapon. It's political conflict taken to a level that would have shocked even Nixon. But the United States isn't the only country where we've seen this pattern play out. Look at Turkey under Recep Tayyip Erdogan. For years, Erdogan has been attacking Turkey's central bank, firing governors who wouldn't cut rates fast enough, replacing them with political loyalists, publicly berating the institution for not following his orders. He has got this economic theory which basically every credible economist says is wrong, that high interest rates cause inflation rather than fighting it. So he has forced the central bank to keep rates artificially low even as inflation has spiraled out of control. The result? Turkey's currency, the lira, has collapsed. It's lost something like 80% of its value over the past decade. Inflation in Turkey has been running at 60, 70, sometimes 80% annually. People's savings have been wiped out. The cost of imports has skyrocketed. What was once a promising emerging market economy has turned into an economic disaster zone, all because one leader decided he knew better than his central bank and had the political power to impose his will. That's what happens when you destroy central bank independence for political revenge or ideological stubbornness. Or look at Argentina, which has been stuck in a cycle of economic crises for decades, partly because of political interference with its central bank. Every time a new government comes in, they pressure the central bank to finance government spending by printing money, short term. It creates a boost. There's more money flowing through the economy, people feel wealthier. The government can fund popular programs. But long term, it creates hyperinflation that destroys the currency and devastates ordinary people. Argentina has defaulted on its debt multiple times. The peso has lost almost all its value. People don't trust their own currency, so they hoard dollars or try to move their money out of the country. It's a mess that keeps repeating because political leaders keep making the same mistake. Venezuela is probably the most extreme recent example. Hugo Chavez and then Nicolas Maduro essentially turned the central bank into a printing press for government spending. They fired anyone who pushed back, installed loyalists who do whatever the government wanted, and used monetary policy as a tool of political control. The result was one of the worst economic collapses in modern history. Hyperinflation hit literally millions of percent. The currency became worthless. People were starving in a country that used to be the richest in South America. Millions fled as refugees. The whole society essentially collapsed, and at the heart of it was the destruction of central bank independence. Now, I'm not saying America is about to become Venezuela or Argentina. The US economy is way bigger, way more sophisticated, with much deeper institutions and global connections. But the principle is the same. When you destroy the independence of your central bank, when you turn monetary policy into a tool of political conflict, when you prioritize political revenge over sound economic policy, you're playing with fire. And the bigger the economy, the bigger the fire when it gets out of control. What's happening right now with Trump's government investigation into Jerome Powell isn't some unprecedented, unimaginable situation. We've seen this pattern before in US politics and around the world. We know how it ends. The only question is whether we're going to learn from history or repeat it, and right now. Based on the political headlines and the trajectory we're on, it's looking like we're about to repeat it on a scale that could make all those other examples look small by comparison. The 2008 crisis was about financial engineering and housing bubbles. This potential crisis is about trust, institutions, and the fundamental credibility of American economic policy. That's way more dangerous. Here is something that should really grab your attention. When you've got people from across the entire political spectrum, Democrats, Republicans, Libertarians, progressives, all saying the same thing about a crisis, you know it's real. And that's exactly what's happening with this Federal Reserve situation. The bipartisan condemnation of Trump's government investigation is so unusual, so widespread, that it tells you this is just another partisan fight where one side loves it and the other hates it. This is different. This is everyone who understands economics, regardless of their political beliefs, sounding the alarm bells at maximum volume. Let's start with the most dramatic example, those three former Fed chairs coming together. Janet Yellen, Ben Bernanke, and Alan Greenspan are about as different as you can get politically and philosophically. Yellen's a Democrat who served in the Obama administration. Greenspan's a libertarian who was appointed by Reagan. Bernanke's more moderate, appointed by Bush. Under normal circumstances, you'd never see these three agree on what to have for lunch, let alone issue a joint statement on anything. They've got different views on regulation, on fiscal policy, on pretty much every economic question you can imagine. But they came together to condemn this investigation in the strongest possible terms, calling it an unprecedented attempt to use prosecutorial attacks to undermine Fed independence. Think about what it took for them to do that. These are people who've spent their entire careers being careful, diplomatic, avoiding controversy. They know that when former Fed chairs speak out, markets listen, and they could accidentally make things worse. But they decided the risk of staying silent was greater than the risk of speaking up. That should terrify you, because it means they see this situation as existential, as a threat to the very foundations of American economic policy. And it's not just former Fed officials. You've got Republican Senator Thom Tillis, a member of Trump's own party and a key player on the Senate Banking Committee, publicly breaking ranks. Tillis didn't just express mild concern or ask for more information, he went hard, calling the investigation inappropriate and vowing to block every single Trump nominee to the Federal Reserve until the probe gets resolved. He even questioned the DOJ's credibility in pursuing this case. That's a massive political risk for a Republican senator to take, going directly against a Republican president on such a high-profile issue. When you see that kind of move in U.S. politics, it tells you a couple of things. First, Tillis and other senators who might follow his lead are genuinely worried about the economic impact of destroying Fed independence. They're not doing this for political points or to look good on the evening news. They're doing it because they understand what's at stake. Second, it suggests there might actually be enough opposition within Trump's own party to throw sand in the gears of this whole scheme if Republican senators start blocking Fed nominees. If they start demanding the investigation be dropped, that's a real check on presidential power that could actually matter. The business community has been unusually vocal too, and that's significant because corporate America usually tries to stay neutral on political conflicts like this. They don't want to alienate either party, don't want to risk regulatory retaliation, generally prefer to keep their heads down and make money. But major business groups, prominent CEOs, and Wall Street leaders have been quietly but clearly signaling their concern about the Fed investigation. Some have made public statements about the importance of central bank independence. Others have been lobbying behind the scenes, calling senators, trying to get the message through that this is dangerous for market stability and business confidence. Even international organizations that normally stay far away from commenting on domestic U.S. politics have weighed in. The International Monetary Fund, which usually speaks in the most diplomatic, carefully hedged language imaginable, issued a statement emphasizing the critical importance of Federal Reserve independence for global financial stability. That might sound like bureaucratic boilerplate, but for the IMF to say anything at all is remarkable. They're basically warning that this situation could have implications for the entire global economy, not just America. What makes this bipartisan alarm so important is that it cuts through all the usual noise and partisan spin that dominates political headlines in normal Washington fights. You can predict who's going to say what based on their party affiliation or ideological leanings. Democrats attack, Republicans defend. or vice versa, the public gets confused about what's real and what's just political theater. But when you've got former officials from both parties, current senators risking their political careers, business leaders who usually avoid controversy, and international organizations all saying the same thing, that this is dangerous, that this threatens economic stability, that Fed independence matters, that's when you need to pay attention. The political conflict between Trump and the Federal Reserve isn't playing out along traditional partisan lines, because the stakes are too high and the risks are too obvious to anyone who understands how the economy actually works. This isn't about whether you prefer bigger government or smaller government, higher taxes or lower taxes, more regulation or less regulation. Those are legitimate policy debates where reasonable people can disagree. This is about whether the United States is going to maintain the institutional independence that has kept the dollar as the world's reserve currency and the American economy relatively stable through multiple crises. What's also remarkable is how quickly this consensus formed. The criminal investigation was announced, Powell made his statement, and within days you had this chorus of alarm from across the political spectrum. That rapid response tells you that people who follow these issues closely immediately recognize the danger. They didn't need weeks of analysis or careful study. They saw the threat to Fed independence and understood instantly what it could mean for economic turmoil, market instability, and the financial crisis that could follow. The financial news coverage has been all over the map, with some outlets downplaying the significance and others treating it like the emergency it is. But if you look at who's sounding the alarm, former Fed chairs with decades of experience, senators who understand banking policy, business leaders who live and breathe markets, international economic institutions, the message is clear and consistent. This is unprecedented. This is dangerous. This could trigger economic consequences that hurt everyone, regardless of political affiliation. And right now, the only question is whether enough people will listen to those warnings before it is too late to prevent the damage from becoming permanent. So here's the million-dollar question, actually. Make that the trillion-dollar question. What happens next? Where does this crisis go from here? Because we're at this critical inflection point where the situation could go in several different directions, and each path leads to massively different outcomes for the global economy, for your money, for everyone's financial future. And the scary part is that a lot of what happens next depends on decisions being made right now in rooms we can't see, by people playing a game of chicken with the entire economic system. Let's game out the scenarios, starting with the best case outcome, which honestly doesn't look all that likely at this point. In this scenario, cooler heads prevail. Maybe enough Republican senators follow Tom Tillis's lead and make it clear they won't support any Fed nominees or confirm any appointments until the investigation gets dropped. Maybe business leaders and Wall Street put enough pressure on the White House that Trump decides the political cost isn't worth it. Maybe his advisors convince him that destroying Fed independence would actually hurt the economy so badly that it damage his own legacy and political standing. The Justice Department quietly winds down the criminal investigation, citing insufficient evidence or something equally vague. Powell stays on as chair through his term or steps down but remains as a governor. Fed independence survives, markets stabilize, and we dodge the bullet. But here's why that scenario seems unlikely. Trump doesn't have a track record of backing down when he is committed to something, especially when he views it as political revenge against someone who crossed him. The investigation has already been announced, subpoenas have been served, and walking it back now would look like weakness or defeat. Plus, Trump genuinely seems to believe that Powell and the Fed have been holding back the economy by keeping rates too high. That everything would be better if the Fed just slashed rates and pumped money into the system. So the political incentive and the personal belief system both point toward escalation, not de-escalation. The middle ground scenario is probably the most likely in the short term, and it's where things get really messy and unpredictable. In this version, the investigation continues but doesn't immediately lead to an indictment. It just hangs there like a sword over Powell's head, creating constant uncertainty and pressure. Powell might step down as chair in May when his term ends but stay on as a governor, setting up this awkward situation where Trump appoints a new chair but can't fully control the board because Powell is still there as a swing vote. Markets stay volatile because nobody knows how this plays out. Foreign investors start slowly reducing their dollar exposure, not in a panic but in a gradual shift. Interest rates drift higher not because of a crisis but because of persistent uncertainty. The economy slows down, maybe tips into a mild recession, but doesn't completely collapse. This middle scenario is dangerous because it is slow-moving enough that people might not recognize how serious it is until it is too late. It's like the frog in boiling water metaphor. If you throw a frog into boiling water, it jumps out, but if you put it in cool water and slowly heat it up, it doesn't notice until it's cooked. The economic impact would accumulate gradually. Each month, a few more international investors decide to diversify away from dollars. Each quarter, borrowing costs tick up a bit more. Each year, the economy grows a little slower than it should. And before you know it, 5 years down the road, you wake up and realize America has lost its economic dominance. The dollar is no longer the undisputed reserve currency. And the standard of living has declined significantly. Then there's the worst-case scenario, the one that keeps economists up at night, and it's not as far-fetched as you might hope. In this version, Trump goes all the way. The investigation leads to an indictment of Powell, or at minimum creates enough pressure that Powell resigns completely. Trump appoints a loyalist as the new Fed chair, someone who will cut rates aggressively regardless of what inflation does. Someone who will use monetary policy as a tool of political objectives rather than economic stability. Other governors get pushed out through various means. That Supreme Court case against Lisa Cook succeeds, creating another vacancy. Within a year or two, the Board of Governors is stacked with political appointees who take orders from the White House. Once that happens, once Fed independence is truly dead, that's when the real crisis hits. Markets don't wait around to see how it plays out, they react immediately. Foreign investors dump treasury bonds en masse. The dollar crashes. Interest rates spike not because the politicized Fed raises them, but because the market demands higher rates to compensate for the risk. Stock markets worldwide plunge as the foundation of the global financial system cracks. Credit freezes up because nobody knows what anything is worth anymore when the anchor currency is in free fall. We get the full doom loop I described earlier: capital flight, exploding rates, economic freeze, market collapse, currency crisis, and economic turmoil that makes 2008 look like a dress rehearsal. And here's what makes this worst-case scenario particularly terrifying. Once you've destroyed trust in institutions, once you've proven that political revenge matters more than sound economic policy, it's incredibly hard to rebuild. Even if a future president tried to restore Fed independence, even if they appointed credible, independent-minded people, why would the world believe it? They'd seen that American institutions can be compromised, that political conflict can override economic sense, that the rules can be changed on a whim. That loss of credibility could last for decades. The timeline on all this matters too. Powell's term as chair ends in May 2026, that's just a few months away. The Supreme Court case about Lisa Cook is scheduled for arguments on January 21, 2026, that's basically right now. These aren't distant future events we can worry about later. The decisions that determine which scenario we end up in are happening in real time. Every day that the criminal investigation continues, every political headline about the Fed, every statement from Powell or Trump or congressional leaders, it all feeds into market perceptions and investor decisions that are shaping the outcome. What is also critical to understand is that even in the best-case scenario where the investigation gets dropped and Fed independence survives, we've already paid a price. The damage to credibility has already happened. International investors have already seen that the White House is willing to weaponize criminal prosecution against the central bank. That doubt, that loss of trust, it doesn't just disappear even if the immediate crisis gets resolved. It's like a crack in the foundation of a building. Maybe the building doesn't collapse right away, but it's structurally weaker, more vulnerable to the next shock that comes along. So what happens next? Honestly, we're in uncharted territory in U.S. politics and economic policy. We've never had a situation quite like this, where a president has gone this far in attacking Fed independence using the tools of criminal prosecution. The historical parallels give us clues. The economic theory tells us what could happen, but the specific path forward depends on choices that haven't been made yet. What we do know is that the stakes couldn't be higher, the risks couldn't be clearer, and the window for avoiding the worst outcomes is closing fast. Alright, let's get practical here, because understanding the crisis is one thing, but actually protecting yourself and your family from the economic impact, that's what really matters. And I've got to be straight with you, there's no perfect solution. No magic bullet that makes you completely immune to a potential financial crisis of this magnitude. But there are smart moves you can make right now that'll put you in a much better position than most people who aren't paying attention to what is happening with the Federal Reserve and this government investigation. First thing you need to understand, diversification isn't just some boring advice, it is literally the only strategy that works when you're facing this level of uncertainty. Right now, most Americans have the vast majority of their wealth tied up in dollar-denominated assets. Your savings account, dollars. Your 401k, US stocks and bonds. Your house, its value is in dollars. See the problem, if the dollar collapses. If this political conflict destroys Fed independence and triggers a currency crisis, you're completely exposed with no protection. So what does smart diversification look like? It means spreading your risk across different types of assets that don't all move together. Some of your wealth should be in hard assets, things that have intrinsic value regardless of what happens to paper currencies. Gold is the classic example. And there's a reason it's been hitting record highs lately. When smart money gets nervous about currencies and government institutions, they buy gold. You don't need to go crazy. But having 5 to 10% of your investable assets in physical gold or gold ETFs makes sense as insurance against currency collapse. Real estate can be another form of protection. But you've got to be careful. If interest rates spike the way we're worried they might, real estate values could drop significantly in the short term. But over the long haul, if we end up with serious inflation because the dollar's losing value, real estate tends to hold up better than cash. The key is making sure you're not over-leveraged. If you've got a huge mortgage and rates jump, you could get squeezed. Beyond asset allocation, you need to think about debt management. If we're heading into a period of rising interest rates, having a lot of variable rate debt is dangerous. Credit card balances, home equity lines, adjustable rate mortgages, those could become much more expensive very quickly. Now is the time to either pay that stuff down or lock in fixed rates while you still can. On the flip side, if you've got fixed rate debt at low rates, don't rush to pay it off early, because if we do get inflation, you'll essentially be paying it back with cheaper dollars. You also need an emergency fund, and I mean a real emergency fund. In a serious economic crisis triggered by this political revenge against the Fed, you might lose your job. Your business might struggle, or unexpected expenses might hit right when credit is tight. Financial experts usually recommend 3 to 6 months of expenses in cash. But given the current uncertainty in US politics and the potential for economic turmoil, I'd push that to 6 to 12 months if you can manage it. Yeah, cash loses value to inflation. But liquidity matters when the market instability hits. Think about your income sources too. If you're entirely dependent on one job, one employer, one income stream, you're vulnerable. This isn't the time to quit your job or anything dramatic. But it is smart to think about developing additional skills, side income, multiple revenue streams. In economic downturns, people who have diverse income sources weather the storm much better than those who put all their eggs in one basket. Here is something most people don't think about. Your professional network and relationships matter more in a crisis than in good times, when the economy's humming along. Networking seems optional. But when things get tough, when companies are laying people off and businesses are struggling, the strength of your relationships can make the difference between landing on your feet or really struggling. And invest time now in maintaining professional connections, helping other people, building goodwill. And look, I know this all sounds kind of pessimistic, but here's the reality. Preparing for a potential financial crisis doesn't mean you're rooting for it to happen. It just means you're taking the warning signs seriously. Think of it like buying insurance. You don't buy homeowners insurance because you want your house to burn down. You buy it because the downside of not having it is catastrophic. The people who get hurt worst in financial crises are always the ones who assumed everything would be fine, who didn't see it coming, who had all their eggs in one basket. The people who do okay are the ones who saw the risks, diversified their assets, managed their debt, built up reserves, and developed options. That is not about being smarter or luckier, it is about taking action based on The information available right now about the threats to Federal Reserve independence and the 2008 crisis-level economic impact we might be facing. So here we are at the end, and I need you to really understand what's at stake here, because this isn't just another news story that'll fade away in a week. What we're witnessing right now with Trump's war on the Federal Reserve, with this criminal investigation into Jerome Powell, with the systematic assault on central bank independence, this is a turning point. This is one of those moments that historians will look back on and say that's when everything changed. And the tragedy is that most people won't realize what is happening until it is way too late to do anything about it. Let me put this in the starkest possible terms. The Trump administration has effectively weaponized the Justice Department to attack the one institution that has kept the global economy stable for nearly a century. This isn't a policy disagreement. This isn't a debate about the right interest rate or the best approach to fighting inflation. This is political revenge dressed up as a government investigation, and the collateral damage could be your retirement savings, your job, your financial future, and the economic stability of the entire world. Everything we've talked about: the destruction of Fed credibility, the capital flight from U.S. assets, the explosion in interest rates, the freezing of the real economy, the stock market collapse, the dollar crisis, the return of stagflation. None of this is hypothetical fear-mongering. It's the logical, predictable outcome of destroying Federal Reserve independence. We've seen it happen before in U.S. politics with Nixon and Burns in the 1970s. We've seen it happen in other countries like Turkey, Argentina, Venezuela. The playbook is always the same. Political leaders pressure the central bank. The central bank caves or gets taken over. Short term, everything looks fine, and then the economic impact hits like a freight train. The difference this time is the scale. When Nixon pressured Arthur Burns, America was important, but the global economy wasn't as interconnected. When Turkey's Erdogan destroyed his central bank's independence, it was a regional crisis, not a global one. But the United States isn't just another country. The dollar is the world's reserve currency. U.S. Treasury bonds are the foundation of the global financial system. The Federal Reserve's decisions ripple through every economy on the planet. So when you attack Fed independence, when you turn it into a political tool, you're not just risking an American recession, you're risking a global financial crisis that could make 2008 look like a warm-up act. And here's what keeps me up at night: there is no cavalry coming to save us from this. The European Central Bank can't step in and replace the Fed as the world's central bank. China's not ready or willing to have the yuan become the global reserve currency. There's no backup plan, no alternative system waiting in the wings. If the dollar loses its status, if Fed independence gets destroyed, if this political conflict triggers the kind of economic turmoil we've been discussing, we're all just flying blind into uncharted territory. The warning signs are everywhere if you're willing to look. Gold at record highs, 3 former Fed chairs issuing emergency statements, bipartisan condemnation from senators who never agree on anything, market instability creeping into treasury yields and currency markets, international organizations sounding alarms. The financial news is starting to catch on, but most people are still scrolling past it, still assuming that somehow everything will work out fine because it always has before. But that assumption that things will always work out, that the institutions will hold, that cooler heads will prevail, that's the most dangerous assumption you can make right now. Because the people making decisions in the White House aren't operating on that logic. They're operating on political revenge, on settling scores, on the belief that they can bend every institution to their will without consequences. And by the time the consequences become obvious to everyone, by the time the economic impact is undeniable, it'll be way too late to prevent the damage. So what's the final verdict here? What is the bottom line on Trump's declaration of war against the global economy through this shocking Fed investigation? It is this: we are watching a slow-motion train wreck that could end American economic dominance and trigger a financial crisis of historic proportions. The investigation into Jerome Powell isn't about building renovations or bureaucratic oversight, it's about power, control, and the willingness to sacrifice long-term stability for short-term political gains. If you take nothing else away from this entire discussion, understand this: the independence of the Federal Reserve isn't some abstract academic concept that only matters to economists. It's the foundation that everything else rests on. It's what makes the dollar trustworthy. It's what keeps interest rates from spiraling out of control. It's what prevents political leaders from destroying the economy for their own benefit. And once that foundation cracks, once that trust evaporates, you can't just patch it up with some new appointments or policy announcements. The damage is structural, potentially permanent. The next few months are absolutely critical. Powell's term as chair ends in May 2026. The Supreme Court case about Lisa Cook is being argued. Right now, the criminal investigation is ongoing. Every decision, every statement, every development in this political conflict will shape whether we slide into the worst-case scenario or somehow manage to preserve Fed independence and avoid catastrophe. But make no mistake, we're closer to the edge than most people realize. You now know what the vast majority of people don't know. You understand the stakes, the risks, the historical parallels, the potential outcomes. You've got the information you need to protect yourself and your family from the economic turmoil that might be coming. The question is, what are you going to do with that knowledge? Are you going to take action, diversify your assets, manage your debt, build up reserves, develop multiple income streams? Or are you going to assume it'll all work out and then wonder what happened when the crisis hits? This is the story of how one man's political revenge against the Federal Reserve could crash the global economy. This is the story of institutions under assault, of trust being destroyed, of warning signs being ignored. This is the story that'll define the economic landscape for years, maybe decades to come. And unlike most stories, this one isn't over yet. We're still in the middle of it, and the ending hasn't been written. But if history is any guide, if the patterns hold true, if the people in power keep making the same mistakes that have destroyed economies throughout history, then we're heading for an economic impact that'll make the 2008 financial crisis look like the good old days. The alarm bells are ringing. The only question is whether anyone's listening.